What an exciting couple of weeks. Bitcoin continues to be on sale, which in many ways is better than it having gone to the moon. And speaking of going to the moon, humanity is on its way to the moon for the first time in more than 50 years with last night's exciting launch of the Artemis 1 mission, the largest rocket to date ever flown. This and more on this week's episode of the Bitcoin Bulletin Podcast. This podcast is for information and entertainment purposes only. Nothing on this podcast should be construed as financial advice. All views expressed on this podcast are solely the opinions of the host and or any guests that we might have from time to time. Nothing on this podcast should be construed as a specific inducement to make a particular investment or to follow a particular investing strategy. Hello, you sexy sat stackers, and welcome to the latest episode of the Bitcoin Bulletin Podcast. Today is Wednesday, November 16th, 2022, and that means once again it is DCA Wednesday. A lot has changed, and a lot has stayed the same in the last week. On the positive news, we are not getting lashed with a hurricane like we were last week, and Bitcoin is still on sale. It's not the excitement or panic of the crash that we had going on just last week. In fact, it appears to have stabilized around the $16,000 something range. Whether or not we've formed a bottom or not, obviously, is too soon to tell. But there certainly is a lot to talk about. However, before we get into all that, let's take a quick look at the vital statistics. As of the time of this recording, we are sitting at a block height of 763,488. As I just mentioned, Bitcoin is ringing in at $16,520 per Bitcoin. That is the cheapest we have ever seen it on this podcast. Currently, you will receive 6,053 sats per US dollar. That's 6053 Moscow time, 6,053 sats per cuck buck. If you value your wealth in shiny metal rocks, well, Bitcoin is on sale because it will currently only cost you 8.9 ounces of gold to buy just one Bitcoin. That is still an awful lot of gold, but obviously down quite a bit from just a couple of weeks ago. And speaking of down quite a bit, Bitcoin's market capitalization has also taken a hit, ringing in at a total market cap of $317.3 billion. That is 11.3 billion less than last week. And last week it was down by almost 60 billion. So obviously nowhere near that 1 trillion total market cap that we crossed over when Bitcoin was above $50,000, when it set its new all-time high or new all-time highs during the double top of the last spring and a year ago, not last spring, but a year ago spring and a year ago November-ish. For those of you who value your wealth in oil, it will currently cost you 560,749 sats per barrel, and one Bitcoin would score you 178.32 barrels of oil, or another way to look at it is it would cost you 178.32 barrels of oil to purchase just one Bitcoin. And wow, this is the first time we've seen the Papa John's index quite this low. Currently, one Bitcoin will buy you 990 Papa John's pizzas. That is down significantly, but still, that's over 2.71 years worth of pizzas. That's still a heck of a lot of pizza, a lot more pizza than Laszlo purchased on Bitcoin Pizza Day all those years ago. That'll feed a family of 4 once a day for almost 3 years for just one Bitcoin, but obviously nowhere near as impressive as when it was over 1,000 Papa John's pizzas for Bitcoin. This kind of dovetails with the news, but the mempool is absolutely packed. I'm currently showing about 109 blocks worth of Bitcoin pending in my mempool. That is a heck of a lot of transactions. 21,000 transactions pending just to clear out what's already pending in the mempool. Last week there were 3 blocks worth of transactions pending. Just to put that into perspective, some of those are really large transactions, so maybe they're multi-sigs or old transactions from legacy addresses that take up more space. Who knows? I haven't delved that deep into it. The fact of the matter is, though, there is a lot of on-chain activity pending. Hopefully, most of that is people getting their Bitcoin off of exchanges, and we've certainly seen some of that. I'll get into more of that here in a little bit as soon as we finish up with the vital statistics. However, even with all that activity pending, it's still estimating that 1 sat per byte transactions will clear within a day. And currently, to guarantee that your transaction is included in the next block, it's recommending a fee of 29 sats per block. And really, that's not that high considering just how jammed up the mempool is. 2 weeks ago, it was recommending 25 sats per block, and there were only 12 blocks pending in the mempool. So have patience. If you aren't in a hurry, if you're not in a panic, hurriedly withdrawing your Bitcoin from an exchange, and you have some time to wait. Usually, that mempool tends to clear up on nights and weekends, U.S. and Europe time. For some reason, when people in the United States and Europe are asleep, that mempool tends to clear out rather quickly. And speaking of the number of transactions, the metric that I like to follow, the 24-hour transaction rate, isn't that high considering the number of transactions pending. So, I looked at the mempool yesterday or the day before, and there were 80 transactions pending. So maybe some of that is still just clog leftover, bloat left over from the last day or so. But 3.16 transactions per second is not a tremendously large amount of transactions compared to last week when we saw 3.46 transactions per second humming through. And again, that's not any kind of transaction analysis. That's just a raw look at the on-chain activity again. And it also has nothing to do with what's on the Lightning Network. Usually I'd say it doesn't take into account people just swapping IOUs back and forth on exchanges. And obviously what we found out about FTX, basically 100% trading paper Bitcoin. I don't remember where I read it, but someone estimated that they had over $1 billion worth of basically paper Bitcoin that they had sold, $1 billion worth of customer Bitcoin that they didn't actually own any Bitcoin to back. And that is that nightmare scenario that everybody had been talking about, everybody had been warning about ever since, Trace Mayer started Proof of Keys Day many, many years ago before he became kind of a pariah and disappeared. But like they say, not your keys, not your Bitcoin. And it's worse than that. In the case of FTX, that Bitcoin did not even exist. And speaking of on-chain and the blockchain, we are currently 576 blocks away from the next mining difficulty adjustment. That is about 4 days from now, sometime about November 20th. And currently that's looking like it's going to be another difficulty increase of anywhere from 0.2% to 1.24%. Of course, as you remember last week, it was more like 3 to 5% increase that it was forecasting. And as I often say, the further you are away from that difficulty adjustment, the less accurate that estimate is going to be. But now that we're closing in on just 4 days away, I think that's actually less than 4 days worth of blocks, like 3 days and 10 hours or so worth of blocks. That number is probably a little more reliable. And that is because blocks are currently averaging 9 minutes and 54 seconds this difficulty epoch. As you remember, Bitcoin is programmed to shoot for an average of 10-minute block times. Last week, they were zooming in at 9 minutes and 30 seconds, which is why it was forecasting a higher difficulty increase. Now it's a lot closer to that 10 minutes at 9 minutes and 54 seconds. So we're looking at little to no increase in mining difficulty. Quite frankly, I'm surprised that's not going to be a decrease, because with the plummeting value of Bitcoin in the last week, down all the way to as low as I think I saw it at 15,900 at one point, that means a lot of miners are really unprofitable right now, and you'd expect some of them to be switching off. Apparently that has not been the case, because network hash rate has obviously been increasing, and that is why we're looking at a difficulty increase, albeit just a minor one. All right, some of those things I wanted to talk about. Of course, the big story continues to be the FTX collapse. And it wasn't just FTX. There was a lot of contagion. One of the no-brainers was BlockFi, because BlockFi had basically been on the verge of insolvency, 6 months or so ago, when FTX came to their rescue and promised them a couple $100 million in loans so they could continue to operate. I don't think it was an insolvency issue. I think that was a liquidity issue at the time, which means technically they had the reserves. They just weren't liquid, so they needed liquid reserves to be able to meet customer withdrawals, and that loan had allowed them to do that. Obviously, with the collapse of FTX, that loan is no longer available to BlockFi, and that is why you saw BlockFi lock customers out, and I think they've since filed for bankruptcy protection as well. And all of this has led to a rekindling of the proof of reserves debate. A lot of people saying that they would like to see, exchanges post that they have the coins they say they have on account to meet customer withdrawals. Like if you have 10 Bitcoin on an exchange, you'd like to know that it's really there, right? That it's not just fake paper IOUs like it turned out to be with FTX and probably with other exchanges. But interestingly enough, that whole proof of reserves thing can be gamed. It isn't necessarily a proof of anything. For example, a lot of people have been reporting that, for example, FX Street just 2 days ago had an article where they pointed out that Gate.io, quote unquote, completed its proof of reserves audit on October 28, 2022, merely days after receiving $404 million worth of Ethereum for Crypto.com. And that when investigating transactions by Crypto.com, on-chain analysts identified a suspicious 320,000 Ether transaction to Gate.io. And CEO of Crypto.com explained this transfer was just an accident, that Crypto.com had intended to move the funds to cold storage, but accidentally sent it to a different exchange. So basically what it's implying there is that Gate.io did not have the money that they did not have the coins, in this case Ethereum, that they said they had. So they borrowed 320,000 Ether from Gate.io or from Crypto.com. And then as soon as they said, look, here, we have this 320,000 ETH, sent it right back to Crypto.com. So that illustrates that whole not your keys, not your coins, the whole proof of keys concept, that proof of reserves can be fudged, it can be manipulated, it can be bullshitted. So really the only way to guarantee that your coins are your coins is to buy them and immediately get them off of your exchange. I just helped my 70-something-year-old mother remove her Bitcoin to a Ledger wallet the other day because it had been on Coinbase, and Coinbase was not letting her transfer her Bitcoin right away, so she had to keep it on exchange for 5 days before they would let her transfer it. That could potentially be a problem right now, because in this age, who knows whether an exchange will still be around in 5 days. You might be willing to trust that just a few months ago, but where we are right now, with the potential contagion spreading, I mean, there's rumors that basically all exchanges might have some sort of liability or exposure to this FTX debacle. So long and the short of it is, if you are buying coins on an exchange, and pretty much everybody does, right? Because few people, although you should practice purchasing peer-to-peer if you can, as Bitcoin was intended to originally be used. But let's face it, most people buy their coins on exchanges, and that's why I use Coinbase. That's why we use Cash App for the purpose of this podcast, because Cash App lets you transfer immediately. Some exchanges won't even let you spend your money immediately. Like, I used to have a Coinbase Pro account that I used, and if I wire transferred money in, they wouldn't even let me spend it until 5 business days later, when that money had officially, quote unquote, settled. And then I think later on they would let you purchase it. But as it stands, like I was just explaining about my mom, you could purchase Bitcoin, but you couldn't withdraw it. They made you hold it in their custody for 5 business days. Basically, that's accomplishing the same thing as making you wait making you wait for 5 days before you can spend your money, because you haven't really spent it if you theoretically bought Bitcoin, but they could claw it back for any up to 5 days before you're allowed to remove it. And so, again, do your own research, find an exchange or a source for purchasing Bitcoin that meets your needs. But I would highly, highly encourage you to only use an exchange that will let you immediately transfer your funds to your cold storage, and then get them the heck off the exchange before you become one of these victims. Because clearly people like to say this is, the new Mt. Gox 2.0, but this is worse. I think when Mt. Gox collapsed, it was somewhere around $400 million. It was in the hundreds of millions of dollars of customer money that they disappeared with, or that they lost. And this FTX debacle is in the billions. So it's worse than Mt. Gox, with the minor exception that they're not the only exchange out there and that there are more options for people. But again, getting back to proof of keys, if you don't know what proof of keys is, proof of keys was kind of like a Bitcoin holiday. It was created or started, or at least made famous, by Trace Mayer back before he kind of became a pariah by, I don't know if you remember, but I think it was at Tone Vays's conference in Las Vegas, his unconfiscatable conference, maybe 2 years ago or so, when Trace Mayer was going around shilling Wimble token, and he got called out at the Scammy Awards at the end of the conference, humiliated for promoting a shitcoin that he was getting paid to promote at a Bitcoin-only conference. Anyway, all of that aside, Trace Mayer established proof, or at least made popular the proof of keys concept, and that was traditionally January 3rd in honor of Bitcoin's Genesis block. You were supposed to get your keys off the exchange, and the idea was if everybody get your Bitcoin off the exchange. The idea was if everybody moved their Bitcoin off of exchanges in mass, it would basically be like a bank run. You know, it'd be a put up or shut up. The exchanges would have to prove they had the Bitcoin or fold. And I would rather not take that risk and just get your Bitcoin off the exchanges immediately, especially in today's environment, than do it on January 3rd when there's the possibility that you could, very real possibility that the mass withdrawal could trigger an exchange collapse, and then you don't get your coins at all. So that's what proof of keys is. But more importantly than proof of keys, not your keys, not your Bitcoin should be your slogan, your reeditat, your resound, your esprit de corps, your proof of life. It should be your mantra. It should be your operating thesis. It should be something that just comes natural. Buy your Bitcoin wherever you buy it and immediately send it to at least, a wallet you control, if not to cold storage. And along those lines, not just because people suddenly thought this was a good idea, but possibly just in the sheer panic of the FTX collapse, last week saw a huge spike in transactions in the mempool, something that is clearly ongoing, as we just pointed out, with 120 or whatever it was transactions currently pending in the mempool. I saw someone on Reddit or Twitter, I don't remember where it was, but someone referred to this as the cold rush, which was a clever play on the gold rush. And hopefully, and that's really funny. We'll probably see that in the Bitcoin lexicon for years to come. Multiple people have posted charts and statistics from Glassnode, et cetera, showing the huge net outflow of Bitcoin from exchanges. For example, just yesterday, Plan B on Twitter posted the tweet, 100,000 Bitcoin moved from UTXOs with greater than 10,000 BTC, mainly exchanges, to UTXOs with less than 10 BTC and less than 1 BTC, mainly retail investors doing self-custody in November 2022. This is good for Bitcoin. And he lists that his source was on-chain data from his full node, and he had a chart that broke that down, which you can't see on an audio podcast, but that was Plan B on Twitter at 100 trillion USD, tweeted that out. And that's not the only tweet. There's numerous tweets along those lines about the outflow of Bitcoin from exchanges. That is a positive thing. Obviously, get your keys off those exchanges. Along those lines is President Nayib Bukele, the president of El Salvador, had a great tweet, 2 or 3 days ago, where he said, quote, FTX is the opposite of Bitcoin. Bitcoin's protocol was created precisely to prevent Ponzi schemes, bank runs, Enrons, WorldComs, Bernie Madoffs, Sam Bankman-Frieds, bailouts, and wealth reassignments. Some understand it, some not yet. We're still early. And I had one of those we're still early moments just the other day. When Bitcoin hit its new all-time high in the 67 or 69,000, depending where you get your data, I legitimately was worried. It's the same as the last all-time high. You start thinking, I don't have enough Bitcoin. I wish I'd stacked sooner. Boy, I wish I'd bought more of that $3,000 Bitcoin or more of that $1,000 Bitcoin or whatever that figure is that's appropriate to you. And looking at Bitcoin at only $16,000, I had that sense of relief. It's like, well, for Bitcoin to go back up to 100,000, that doesn't seem like very difficult of an idea to grok. People think Bitcoin will hit $1 million or more one day, and that's harder to visualize for some people. But going back up to the previous all-time high of 69 or maybe a little higher to hit 100,000, that should seem like easily in the realm of plausibility, right? So when Bitcoin was 69,000, if it hit 50,000 or if it hit 100,000, that's less than doubling your holdings, your US dollar value in Bitcoin terms. And, that's a nice gain, but it's nowhere near that 10x or that 20x that people see. But once Bitcoin dropped down to 20,000, well, all of a sudden 100,000 is 5xing your money. And at 16,000, that's more than 5xing your money. So all of a sudden you're back at the point where it's very, very easy to visualize, getting one of those huge old school returns, like, the OGs that got to see these 10x's or these 20x's or these 30 or 50 or 100x returns. And it was getting harder and harder to see that. Even if Bitcoin went from 50,000 to a million, it would be double, 2x to get 100,000, and then another to go to a million would be, 20x. And 20x is a phenomenal return, but it's nowhere near those get rich stories that you heard about, in the 2017 bull run, when people would say, if you'd only invested $1,000 in Bitcoin 10 years ago, you'd have 120 million or whatever the case may be, the truly, truly early adopters. But now it feels like we're definitely early again, because if you could easily see yourself 5xing or 50xing if Bitcoin were to hit more than 50xing, if Bitcoin hits $1 million one day, man, that's tremendous asymmetric upside. So that's really cool. So I guess that's kind of getting onto a tangent again, but President Bukele said we're still early, and we are in many ways, and the ability to make those monster gains again, it looks more realistic. It feels like we're early adopters in terms of Bitcoin's U.S. dollar potential, USD potential in the not too distant future now. When you think of Bitcoin hitting 1 million or 10 million a coin or whatever hyper Bitcoinization would work out to, people think in terms of a couple halving cycles, or 10 years from now, or sometime in their lifetime, or maybe sometime in their kids' lifetime. But it's really easy to see $100,000 Bitcoin as being just, next bull run. So we're early in more ways than one. And that was just kind of that little aha moment I had when I was starting to feel like maybe we weren't so early anymore. And now I feel like we're early again in more ways than one. Of course, the other major news out there was the midterm elections in the United States. In the United States, every single member of the House of Representatives is up for election every 2 years. Senators are elected for 6-year terms, so that, it staggers. Not every senator is up for election at the same time. Of course, the president is elected every 4 years, but midterm elections are a big deal, and that determines who's going to be in charge of Congress. Usually whoever's in power loses some seats during the midterm election, and that turned out to be the case again this time. Not necessarily maybe that red wave that a lot of people were forecasting, but it does look like Republicans took the House of Representatives away from the Democrats. And from a Bitcoin's perspective, that is a good thing. Not necessarily that there are not Democrats who are big Bitcoin fans, but it sure seems like we've seen a lot of them gang up on Bitcoin recently. Obviously, Brad Sherman, Elizabeth Warren, and others were very much rabid anti-Bitcoiners. But on the flip side, TechBalt, Adam Meister, the Bitcoin Meister on Twitter, pointed out just a couple hours ago when he tweeted, quote, "The best news to come out of the USA federal elections, Bitcoin fan Representative Tom Emmer is now House Majority Whip." So we have a Bitcoiner, or at least a Bitcoin proponent, as House Majority Whip. That's a leadership position. So that's not just, another member of Congress, another senator that's pro-Bitcoin, because there's a smattering of pro-Bitcoiners out there, although nowhere near a majority. But to be in a leadership position like Majority Whip, that's a big deal. So that's something that is, this time is different thing. We've never had a majority whip of the U.S. House that was a pro-Bitcoiner before. So that is a tremendously positive development, because, hey, if you're a pro-Bitcoiner, you're less likely to let some anti-Bitcoin legislation pass the House of Representatives, right? So that is good for Bitcoin. So where are we? Bitcoin seems to have stabilized a bit as the dust has settled, although we're all waiting with bated breath to see if the FTX contagion spreads. It has taken down, other entities, most of which really don't affect the average person on a day-to-day basis, or at least not one that they feel that they directly relate to. Bringing down BlockFi definitely hurt people, and I don't personally know anybody who uses FTX. I'm sure some of you do, or some of you did, but the point being, there's a lot more hurt that could be spread if other exchanges go down and take your coins with them. However, the best bottom signal is usually what's known as capitulation. The exact opposite of capitulation is when everybody is giving you investment tips. They used to say about stocks back before Bitcoin, that the saying was, that the market has hit its peak when the shoeshine boy is giving you stock tips, stock picks. And I think the modern equivalent to that was, the top is in when your Uber driver is giving you Bitcoin investment advice. And usually the exact opposite of that is we haven't hit a bottom till everybody thinks that the sky has fallen, that Bitcoin is dead, that it's over. And there's definitely a lot of that going on out there. One example was attorney and co-host of the Inside Bitcoin podcast, Joe Calasari, tweeted, and this is a quote, he's quoting one of his friends, quote, "Time to dump this shit. I appreciate your help, but zero chance Bitcoin recovers after this FTX miss. Sets it back 10 years. And he attributed that to a small business owner who bought Bitcoin in 2020 for his company holdings, parentheses, gave permission for him to share. And that is what capitulation looks like. So capitulation isn't 100% of everybody, saying that the sky is falling and Bitcoin is dead and that's it, the bubbles burst. But when you start seeing stuff like that, that's actually what you start looking for when you might be talking about an actual bottom. Of course, there are plenty of people calling for the price to plummet further. I don't remember who said this. It might have been on the Cafe Bitcoin podcast. I honestly don't remember. I'm pretty sure I heard it on a podcast just in the last couple of days. Someone was calling for sub 4-digit Bitcoin. They were calling for Bitcoin to drop below $10,000. But, if you remember, if you were here for the 2018 crypto winter, I say crypto because it was called the crypto winter. And it is, the winter for Bitcoin and crypto. Although for the OGs, crypto meant Bitcoin. There was only Bitcoin. Bitcoin is a cryptocurrency. And so a lot of people get really offended when you say crypto. They say there's crypto and there's Bitcoin. And crypto really has come to mean like all the altcoins, all the shit coins. But in general, it was referred to as the crypto winter. And this is being referred to as a crypto winter as well. But during that last crypto winter, the big meme was that song that came out, Bitcoin, Please Go to Moon. I know I've sung it for you a couple of times. But basically, Bitcoin was around 3,500 to 4,000. And Tone Vays is out there showing his technical analysis saying that Bitcoin was going to drop to as low as 1. And Mike Novogratz and others were saying, no, Bitcoin has bottomed. And it turns out that Mike Novogratz was correct. And even though he is a Luna shill, that he's an S-coiner, he was right? So there's always, even when you are at the absolute bottom, and you only know that in hindsight, but when we have been at the bottom of the past, there were still plenty of people calling for Bitcoin to fall further. So capitulation doesn't mean everyone agrees that Bitcoin is dead. It just means that the normies think Bitcoin is dead. And there's a lot of normies that think Bitcoin is dead. I definitely got a lot of consolation calls from friends saying, are you okay? Did you get crushed? Clearly, you must have had all your money in FTX or whatever. But the people that I've tried to orange pill for years that I just couldn't, and that's almost like they're giving you an "I told you so," but in a caring, almost condescending sort of way. So when the normies are calling Bitcoin dead, that's usually a pretty big bottom signal. However, amongst the naysayers, CoinDesk was out there with an article just this afternoon saying Bitcoin's next support level closer to $12,000 range. It's now been more than a week since, this is a quote, it's now been more than a week since the price of Bitcoin hit a 2-year low around $15,600, and price charts suggest a drop to $13,000 is still possible. And then blah, blah, blah. They go on to talk about gold-backed cryptos that are doing well. But the point being, as I said, during the 2018 crypto winter, respectable Bitcoin OGs were out there calling for 1K Bitcoin, and that never happened. So, we'll only know if the bottom's in hindsight, obviously. But when I look for what a bottom should look like, it is when the normies think Bitcoin is dead, not everybody. All right, so what else happened out there? Not Bitcoin related, but I got to watch the Artemis 1, the space launch system, the biggest rocket ever flown to date, take the Orion capsule on its way to the moon. It's headed to the moon right now. It did its TLI, or translunar injection, a couple hours after liftoff. I have no idea how long it takes to get to the moon. I think the Apollo missions took about 4 days to get to the moon. But it's going to be really cool to see up close pictures, video of the lunar surface. It's going to feel a lot like it did in the 1970s, I'd have to imagine, when man first went to the moon. And this was an unmanned mission, but it is it's a full dress rehearsal for what we're going to do in approximately 2 years when the next mission has people on board. And it's going to go out and orbit the moon for about a month or so, and then come back. And that is certainly exciting. So to the moon, right? Even if it isn't Bitcoin going to the moon, someone's going to the moon. And that rocket was gloriously orange. So I thought that was a little apropos too, or maybe that was a little... I just got a kick out of the fact that the moon rocket is orange. So we sent the big orange rocket to the moon. And hopefully the big orange coin will go to the moon soon. But in the meantime, this is a buying opportunity. And this is a dollar cost averaging podcast. And we are going to DCA today. But as I've often said, that doesn't mean you can't also BTFD. Hopefully you did buy the dip. I bought the dip. I think I scored Bitcoin for right about 15,900, which wasn't the lowest it got, but pretty close. I don't think it was below 15,900 for more than minutes, if even that long. And I did that by putting in a custom order. It's a limit order, basically, is what most exchanges would call it. But on Cash App, they call it a custom order. And that's one of the cool things about Cash App is you can put in an order, say, only buy or sell or whatever you want to do if the Bitcoin hits a specified price. And I had one out there for 15,900, and I wasn't even paying attention until I got an email saying, you just purchased Bitcoin. And that is really cool. However, for the purposes of this podcast, I do not include that in our stack because we are testing out the concept of dollar cost averaging. And so in order to not taint that data, I don't include that for purposes of this show. But that doesn't mean you shouldn't also have some dry powder out there to pick up Bitcoin when it's on sale. And instead of panicking about the price of Bitcoin right now, you should be jumping for joy like I am. You should be wishing you had more money to invest like I do, because who'd have ever thought we'd have the opportunity to ever purchase Bitcoin this inexpensively again? And if it does drop, remind yourself you don't care. It's an opportunity to buy more because you're not selling for 4 or 10 years or more, right? Or ever. So if you don't ever plan on selling your Bitcoin and it's going to get more expensive, you honestly believe you're going to see $1 million Bitcoin one day, or at least $100,000 Bitcoin one day, or a bare minimum, a new all-time high. Like again, Adam Meister, TechBalt, Bitcoin Meister likes to say, Bitcoin always returns to its all-time high, one day closer to an all-time high. And, we're coming up fast. We're just over a year to go now to the 2024 halving. The 2024 halving is going to be the beginning of April, approximately the beginning of April, maybe as soon as March of 2024. And what is that? A year and 4 months away. So that's coming up quick. And, throughout Bitcoin's entire history, the halving itself isn't where the blow off exuberance of the next bull run is, but it's certainly the beginning. Where were we during the 2020 halving? I think Bitcoin actually dropped a bit because it went up slowly but surely to 2020 and at the 2020 halving, and then maybe it went sideways or up or down a little bit, but it didn't really explode. Bitcoin traditionally doesn't really take off and set its new all-time high till 6 to 18 months after the halving. But it definitely doesn't set a new low. It definitely doesn't set a new, a new cycle low right after the halving. The point being, if history doesn't necessarily repeat itself, but even rhymes, if supply and demand continues to hold true, we're just a matter of months away from the next bull run. And you'll be wishing you purchased more of this $16,000 Bitcoin. And even if it drops to 10,000 or 9,000 or whatever the doomsayers are saying, it doesn't matter. Buy more, right? Because you're not planning on selling. You have not lost money unless you sell, just like you haven't made money unless you sell. But the whole point of the whole concept is to have more sats today than you had yesterday and to have more sats tomorrow than you had today. If you are not comfortable with the size of your stack, and I don't think you ever will be, right? Because those goals tend to shift, and everybody has that initial goal, like whether they want 100,000 Satoshis or a full Bitcoin or whatever. And as soon as you achieve that, you need more, right? So, Bitcoin is on sale, and when things are on sale, you stock up. And if, just because you go to the store and, whatever you're looking to purchase might be 50% off today, doesn't mean you won't find it for another 20% off later, but it doesn't mean it isn't a great deal. So stack those sats, and that's what we're here to do, and that's what we're going to do today. And as usual, to do so, we're going to use the Cash App. Again, the Cash App isn't available everywhere, but as I specified earlier, I like it because I think it's both the easiest way to stack sats and because they will let you get that Bitcoin immediately into your hardware wallet, and they'll let you do it for free if you're willing to wait a little while. I think there's 3 different transfer tiers. One is immediate, and it charges you a fee. One's like soon and charges you a little less of a fee. And then one is free, and they say that can take up to 24 hours. But every week when I've made a transfer, it's always shown up within an hour or so, usually within the next block. Although today, who knows, with so many, transactions, so many blocks pending. But Cash App most likely is going to batch that with a whole bunch of other people. So even if you put in no transaction fee and you're willing to wait, chances are your transaction is going to be included with a bunch of other people who paid that fee. And I don't care if it takes 24 hours for this to end up in my hardware wallet. I do like the fact that they're going to send it immediately, and they're going to send it for free. So I'm going to open up the handy dandy Cash App, and I'm going to click buy Bitcoin, enter $20, and it's going to ask me to confirm. And boom, we just purchased 118,322 more sats. That is the most sats we've ever stacked on one of these DCA Wednesday episodes at the cheapest we've ever purchased Bitcoin. We bought it at the equivalent price of $16,522.69. That brings our total stack to 4,291,442 sats. That is absolutely amazing. If you were one of those people that says, I only have $20 or I only have $50 or whatever you have to invest, if you'd have thought that just stacking $20 wasn't going to get you very much Bitcoin, but you've been doing it every Wednesday for a year with us, you now have more than 4 million sats. And if Bitcoin does hit that, that magic $1 million number one day, that's $42,914.42 worth of Bitcoin. And there's no way you can't say that's one heck of a return. What is that? Almost 40x. That'd be a pretty insane return. But perhaps most importantly, by purchasing today, by purchasing for the cheapest we've ever purchased, that's knocked our average cost basis down another $432.51. That's the other cool thing about buying so cheap. In addition to stacking more sats than we would have if it was more expensive, we're lowering that average cost basis. So far, just the last 3 stacks, the first 3 weeks in November, we've dropped our average cost basis by more than $1,100. We've knocked it down by $1,162.09 just in November. And the longer Bitcoin stays on sale, the lower that average cost basis is going to be. Again, that's kind of moot because if Bitcoin's sitting at $1 million, does it really matter? If your average cost basis was $32,000 or $50,000 or $15,000, as I said, all that's going to matter is the amount of sats you have in that stack. And that stack grew by 118,000 sats. So, Bitcoin has to hit $100 billion for it to hit sat dollar parity. Maybe that'll happen. Maybe it won't happen. Maybe it'll happen, but not in my lifetime. But can you imagine if Bitcoin did hit dollar sat parity and you had just scooped $118,000 worth of Bitcoin for only $20? That's the kind of unbelievable gains that you think of when you think of the OGs out there that mined Bitcoin or that blew 10,000 Bitcoin on a freaking pepperoni pizza. So that's just cool. So the main message I wanted to relate to all of you is keep a positive outlook. Remember to have those strong hands. You're in this for the long term. Any investment should be a long-term strategy. If you're, getting ready to retire or if you're on a fixed income, then you really shouldn't be investing at all. Maybe trying to preserve your wealth, protect it from inflation. But if you have a 10-year horizon or longer, you should really be planning on holding your Bitcoin for a minimum of 1 4-year cycle. I wouldn't even say the next bull run, the next 4-year cycle. So I'd say like 6 years. So one complete cycle. And, if history just continues to rhyme, if those 4-year cycles keep to play out, you will not regret it. That is for sure. Again, this show is not financial advice. It is for information and entertainment purposes. Only my intention for doing this DCA show is to basically just let you follow along and maybe you can glean something from my experience and hopefully something that you'll find useful. But again, what matters is that you keep adding to that stack, and we're going to do that every Wednesday until Bitcoin either goes to the moon and we're all filthy stinking rich, Bitcoin crashes and goes to zero, or you just get bored and stop listening. But until then, keep on stacking those sats, you sexy sat stackers.